We are here to break down the concept of discontinued operations in accounting. Welcome to Accounting How To. I'm your host, Carolyn Grimm, and that's my sidekick, Terrence. We're here to put the fun in accounting fundamentals. So, what is this whole discontinued operations thing all about? Well, let's say you own a business that has two components, two segments. You own an online store and a bricks and mortar store. And you decide to close the physical store and only do business online. So you sell the building, the store fixtures, the delivery van, and any other physical assets that you no longer have need for, and you take that money and you pay off any liabilities, anything that that particular segment of the business owes, and then whatever you have left over is a gain or a loss. So this is an example of a discontinued operation. You still have a business, but you've made a change that's resulted in an out of ordinary gain or a loss. It's an unusual gain or a loss. And because it's unusual, it's not part of the day-to-day operations of the business, we treat that differently on the income statement. We're going to separate it out from the normal revenues and expenses so that anyone looking at the income statement can clearly see that something weird happened. Weird being a technical accounting term, as we all know. But not only do we have a gain or a loss on the sale of the assets of the business, we also have a profit or a loss on the operations of that discontinued part of the business. So let's say we discontinue the store on June 30th. We have 6 months of regular operations in that business that have resulted in either a profit or a loss. That means that we need to figure both the gain or loss on the day-to-day business transactions, the revenues and expenses from the first part of the year or whatever point we close that portion of the business, and the gain or loss on the disposition of the business assets and liabilities, whether it's buildings, vehicles, inventory, accounts payable, what have you. So we separate out our continuing operations from our discontinued operations. So the part of our business that's going forward, we want to keep a close eye on that, keep that separate from all the other stuff that's going on. And we're going to take our discontinued operations and separate them out on the income statement. So first we're going to report our continuing operations, just like we have all along with our income statement. And then down below that, we're going to put in a section for those discontinued operations. So this way, when someone is reading the income statement, they can clearly see what the impact of discontinuing the operation had on the business, both separately and overall. Then we would also add a disclosure to the financial statements describing what we did. And that is the high-level view of discontinued operations in accounting. Until next time, stay balanced, my friends.